All right, cool. So excited for this panel on the evolving role of the crypto investor. We have representation from, I think, many of the leading funds that are thinking about like the future role of the investor in many of these projects, communities. So yeah, I mean, I guess to start, I'd just like to start, I think maybe just like on an individual fund level. Like how has your like theses evolved over time as this industry has kind of progressed and there's like new opportunities for funds to kind of differentiate themselves, both from I think traditional venture capitalists in traditional industries, and well as just like embracing and taking advantage of some of the new opportunities in crypto that are very weird that you can take advantage. So maybe I'll start with you, Michael, from Framework. Talk about how your thesis has evolved.
Sure, yeah. So we started off being very, very focused on DeFi only. I think one of the things that's happened over the last 6 months, maybe a year, is that the aperture lens has expanded into things that are not just DeFi. But one of the things that we do that is different maybe from most other funds is that we actually focus on building alongside the investors that the investment that we make. And when we're building, I feel like that gives us a strong understanding of being closest to the metal, being able to understand what's actually happening, being in the communities, being on top of the platforms, being involved with the technology. I think that's one of the ways that we differentiate ourselves, and I think that's one of the most important parts about being an investor in crypto.
Yeah. Yeah, so I think like one of the interesting things that we see in our asset class is that I think across two dimensions. One is that these assets, they can't always just be held passively in a wallet, the same way you would hold like a stock in custody. So in many cases you'd be active, and I think everyone on stage is kind of like active with their funds as well. And then also, the core teams can't do everything for these projects. So in many cases, you do need new leaders to emerge and help support many of these communities. So I guess, Amy, I'd like to ask you a question. So I think coming from the more traditional world of VC, like how are you adapting to this new environment where you do have these assets that have to be used actively, and you kind of do have to be more community facing. I think maybe a good example to start with would be your work with Sushi.
Yeah, sure. So probably a lot of people here haven't heard of Livespeed. So we're a generalist VC fund. I mean, unlike these gentlemen here, the focus primarily on crypto. We've been investing in this space since 2013, but really have ramped up our investments in the last 12 months. And so, we have 12 billion under management. We've deployed about $500 million of that in the last 12 months, and we'll continue ramping. And so for us, on the pro side, we actually have large portfolios in traditional finance, fintech, gaming, social networks, et cetera, to forge a lot of partnerships, help forge partnerships with companies in crypto. But on the other hand, obviously, we don't have as deep of knowledge in DeFi as you guys do, and so we're trying to learn, get up to speed. And one of the areas is actually how to work with communities. And I think work pretty closely with SushiSwap and kind of got firsthand knowledge of what it means to work very closely with them, talk to them, and really kind of, we were talking about this before, almost like stage a campaign with community members who have good reason to be pretty skeptical around traditional VCs that have, in the last rally, essentially bought a bunch of tokens and dumped them in the bear market. And so I think it's a good muscle for us. It's pretty much mandatory, I think, for any VC wanting to come into the space. And that is both around transparency of communication. What is the value we're going to bring? Like, are we going to be active in governance? What's the team going to look like? In what tangible ways will we be involved with the project going forward? And I think that should be table stakes for pretty much VCs coming in.
Yeah, and I think really what this conversation about, I think there's definitely this general perception, I think, among like retail investors that like VCs are evil in this industry. So I think part of this conversation is kind of highlighting the work that all of you do and the ways that you're involved in these communities and actually creating value and not actually evil. So I guess what are some of the ways that you support team? I know, like, you, Michael, you kind of answered this yourself, but I'd love to hear everyone in the panel just kind of add their own perspective on, different ways that you're working with communities, different ways you're supporting teams. What are some of the capabilities that funds need nowadays to be successful and to really stand out and really create that value for these projects? Maybe Tom or Mark, you want to start?
I'm happy to answer that one for sure. I think, when I think about crypto VC investing and being a founder in the crypto space, one thing that I say to our founders is you are basically a private company with private market problems but public market scrutiny. So you have a network of community, many of whom are short-term oriented kind of traders looking for an early win on a liquid token investment that you as a founder need to manage while you're actively building a startup and a product that goes live and is extremely challenging to update. And so not only are you dealing with the standard challenges of a startup, but you're also dealing with issues like, how do I think about providing liquidity to the market for my token and managing that liquidity across multiple DEXs? How do I think about market making? How do I get listed on a centralized exchange? What happens when the price of my token moves against my community and they get angry with me? How do I deal with that on the fly? So I think, at Mechanism, we're a small team. We're a team of 6 people. We're not building technology like Mike and the Framework team are. We think a lot about token design, but we don't have an army of people like Delphi doing it. And I think where we can add the most value is being strategic with these teams about this side of the business, which is effectively like managing the liquidity, managing the community, and growing in that way that's aligned with your investors that are not your venture investors. So it's an extremely challenging time to be a founder in crypto. There's a lot of easy things. You're able to raise capital pretty quickly, but then what do you do after you raise that capital, right? You have to manage it. So that's one area I think we're really focused on.
Yeah, no, Mark brought up a good point. You guys are really concentrated in where you spend your time, and I'm jealous how good you guys allocate it. And Michael, you and the Framework team build, and Amy, I'm glad to learn more about your team as time goes on. At Delphi, we spend a lot of time in the community. So we're very active in Discord, very active, used to be one-on-one meetings and stuff like that before this all started, but we try to take a grassroots approach to finding the absolute best projects and teams early on. And that's really important because the evolution of our roles in these projects doesn't matter if you're not investing in the right projects, you're just basically trying to save face at that point. So we spend a lot of time sourcing the best teams that we can and investing in them. As for VCs getting a bad rap, I think that's kind of overstated. I mean, we're just a VC is just a group of community builders and investors with incentives aligned. We bring a lot of legal, when these projects get started, they're not just on Reddit. They need help structuring and forming on the legal side, which is a lot of work. It's everything from formation to safes and warrants, all the way up to community building, marketing, building a site, all the way to when you ping Michael to help you guys, build out the tech in a real way, all the way to token econ, making sure your value accrual makes sense, your token incentives make sense, making sure you're not giving too much to party A, B, or C, and you have nothing left for your project anymore. There's a lot of dense work that goes in there that the community doesn't even know. Well, I mean, they know it exists, but it's a lot of work, it's a lot of calls. So before you bash a VC, I mean, ask one of their portcos how much they've helped, I guess is my answer.
Yeah. Cool. I guess with that in mind, how important is it to have so I guess there's 2 components to this participation we're talking about. There's one that's off-chain, which is kind of like the more interpersonal things you're doing. There's also like the on-chain component of it, which is things like providing liquidity or helping teams write code, or even just like something as simple as voting. How important is it to have like a presence on chain, and what are some of the kind of challenges of doing that, whether it be legal, regulatory, like what are some of the hiring needs you may need to have to do that successfully, and also especially around I think governance particularly. When you are a large holder and you do have the power to sway votes, how do you navigate the situation, right? Because I mean, when you do have this kind of thing, this whole VC's evil thing, And now, you have to deal with the perception that you can just control what happens in a given project. So I'd like to hear everyone's answer on this.
I'll kick it off. So first off, it's difficult. I think one of the biggest challenges, especially when it comes to governance, is how do you decide whether or not you want to put your thumb on the scale of one decision versus another. So that requires you to be involved in the community, to be understanding of the governance challenges. I think one of the biggest issues is whether or not you're doing right by the token or whether or not you're doing right by the community, because sometimes the decisions are at odds with each other. And honestly, one of the things that we think about is participation is table stakes. So what does it require for someone to show up to a board meeting to actually vote on a board decision? Well, it's not that much. But if you're not voting in the community, if you're not actually participating in the community, it's basically the exact same thing. And so you have to hire for the right people to be able to participate. You have to bring those people onto the team, and you have to have the right controls and process in place to be able to do that. And honestly, it is kind of a question in a lot of ways with legal and regulatory framework of what are these tokens? How does the SEC view your ownership of those tokens? Can you participate with those tokens? And it's something that everybody's trying to figure out. But it is something that is table stakes, and you have to be able to do it.
Yeah, I'll jump in there. I mean, just building on Michael's answer, it's a great question. It basically, voting on chain is required, but it's a lot of signaling. It's a binary choice of fund X chose Y at the end of the day. And to be able to do that involves a lot of weight, and there's a lot of credit behind that, but it's a lot of work before that vote to understand what you're actually voting on, what the implications are, how it affects the token or the community, as what Michael said. But at the end of the day, it's required, and it takes, carries a lot of weight. It's important.
I think to the point about kind of this conversation around whether VCs add value or not, I think one of the benefits of being a VC in crypto and participating in on-chain governance is oftentimes your time horizon is longer than a lot of the other investors that are actually buying the token on a public exchange. You're communicating directly with the teams. These are early days of building a product, and the product has to be useful. Whether or not the token price appreciates or doesn't appreciate in the short term is something that, of course, matters, and it matters to the team, the strength of your treasury, your ability to hire talent, et cetera. But sometimes challenging short-term pain needs to be made in order for the long-term viability of a project. And when you have, a value-added partner, on your cap table, so to speak, or holding a percentage of tokens that's willing to participate in governance to make sure that the protocol survives through a cycle, right? Because many of the people sitting at this stand have been through the cycle so far. So we've seen teams that have, effectively mismanaged a large treasury and ended up disappearing, right? We've seen other teams who've successfully navigated a bear market cycle and come out on the other side, extremely successful. And so I think that participation is table stakes, as everyone said, but it's important to have someone that's thinking, 3-5 years down the line rather than just like the next 2 months.
I'll maybe add one more comment around value add. And I truly believe that different type of VC funds add different types of value. So I think for some of these guys, it's you have teams of engineers and you're very involved on chain. I think most of our involvement, at least today, is more off chain. Mm-hmm. And we have a team. Lightspeed has a team of over 100 people. More than 50% of them are not investors. And so what are they working on? They're working on helping our portfolio hire. We're active in Washington. We are also do a lot of BD work, and we help with compensation. We're in the company scaling business for the last 25 years, have been through 3 bear market recessions. And so I think that's sort of a different perspective that we bring when we're thinking about, all right, helping DeFi companies, crypto companies grow for the next 5 to 10 years horizon, what that looks like. And then of course it comes down to tangible, value, right? So, we're investors in Solana, and, one of the areas they're really interested in is in gaming. And so we're able to actually introduce them to, a dozen of the largest gaming publishers in the world, or working with some of the crypto companies that are very interested in connecting with the largest banks in the world. Well, we have those relationships for the last decade and can provide warm intros into JP Morgan or Goldman and somebody else. And so this is like one slice of value, like a different type of VC can bring to the table. And certainly on the regulatory fronts, we spent a lot of time having conversations with different regulatory bodies, and also actively work with companies in the portfolio around helping them navigate through that, and will be probably for the next number of years.
One thing I just want to comment on that Amy mentioned is hiring, right? Like it's oftentimes it's like the not so sexy things that are the most valuable. I'll send a resume through to our founders channel, and that's what gets them the most excited. It's extremely hard to find and retain talent in crypto right now. It's one of these weird markets where you have newly minted millionaires that are 23 years old, that can understand on-chain code, that basically don't want to work anywhere. You have opportunities to work at DAOs, you have opportunities to work at different funds. It's extremely, extremely challenging to hire in this space right now. So like something as simple as finding high quality talent is, the classic like, how can I help you VC trope. It actually is helpful, and high leverage things like introductions to other protocols that you've invested in. Founders are heads down building, they're extremely product focused, and we get this, we have the ability to see the broader market and make those connections, and it might seem like it's like an easy thing to do for us, but it can be super high leverage for them.
Yeah, and I think one thing that's also interesting is that I think when many of you first were started investing in this industry, I think a couple things. One, many of these projects were much more early stage. There was much less traction. They were also just much smaller, right? So you didn't really have to have a community around them, or if you did have a community, these communities were like very small, and you could actually like know everyone. So how does your role change as some of these projects start to get more mature and almost like reach like a growth stage, right? So no longer maybe like at a seed stage, but maybe more like series like B or series C or equivalents, right? Because I guess I don't think protocols are doing series Cs right now. Yeah. So like, how do you kind of think about like the role you play as these protocols to take that next big leap to I think going from where we are today, where don't get me wrong, like there's definitely really great like adoption, but it's still not quite like mass scale or and in some ways like some people say it's like a little bit circular right now. So how do we kind of take that next leap, and what role do you all play in that? I know Amy, you touched on many of these things from your perspective as far as like helping scale like these protocols. So I think maybe in that direction, I'd like to hear everyone's answer.
I just spoke, so I'll let someone else wants to
go for it.
It's all good. I mean, I think it's interesting, and I think having funds like Lightspeed enter the space is actually super helpful in that way to help a lot of these protocols to mature to that next level. I think I had something on the tip of my tongue, but I'm going to pass it on to someone else real quick.
So I think a lot of it is knowing what you're good at and knowing what you're not specializing in, and being able to say, okay, this is the area that we're going to invest in, this is the area of growth that we're going to specialize in, this is what we're going to do, this is also not what we're going to do, is really important. But I do think that one of the things that comes with, as we were talking about, table stakes of governance participation or participation in general in the community, one of the things that absolutely comes with investing in crypto assets is that you have to be able to have a balance sheet to be able to participate and provide liquidity, provide assets, be the initial staker, whatever that may be, you have to be able to do that. And that's bridging the gap from zero to whatever, but also, at a certain point, it's kind of like, okay, we're going to turn over the reins to the community, and the rest of the team is going to run it, and we're not going to be the ones that are facilitating it, but we're going to be the ones that are watching it go. And so I think it's a part understanding what you're good at, what you're not good at, but also you have to participate with a balance sheet.
Yeah, I mean, we focus a lot on the token econ side of things, and the projects change a lot as they get larger. So the problems or things you're trying to solve for a 15 mil val gaming project looks a lot different when it has hundreds of thousands or millions of users. I know that's kind of a vague answer, but navigating those changes and those growth differences is very similar to managing the internal dynamics of a company like what Lightspeed specializes in, or I believe they specialize in. So it's really helpful to really help the projects as they grow. And the difference is, 2017 ICO era was just all price talk. Like there was no building going on. your community started and ended as to how many people you can get talking about your price on Yahoo Finance, or I don't know if Discord was really big back then. Maybe.
Advisors.
Advisors, yeah, a lot of advisors, connectors. But today there's a lot of different paths that these projects, their communities can take. Getting a community manager is no longer hiring on LinkedIn. You're grabbing the most active person in your Discord, you're giving them token incentives, and you're telling them to run with it. Here's the founders, this is what we want to do. So I think the difference between like years ago and today for these projects, like as we evolve as investors and as the community evolves, there are really clear paths for the community to get involved across multiple spectrums. And it's exciting for them because they're actually building. They're not just pumping the price and hoping they come back later.
Yeah. And I think also a part of this story of many of these protocols becoming more mature is that their tokens also become liquid as well. And it's one thing that I think is interesting in our industry is that you do get that liquidity so early. And now, no matter how you conceptualize, your fund and how long-term you are managing liquid assets. So this question would be, how do you kind of think about the liquidity for these assets? Does it allow you to reevaluate your theses and potentially get out, right? If something changes early on, do you trade around that liquidity? There's different ways you can kind of play it. It's curious to hear how the panel is thinking about it as well. With these assets that are now in your control, and you can do whatever you want with them.
I think one thing that Michael said earlier is, oftentimes the liquidity is the product, specifically in DeFi. So if you have liquid assets, as a crypto investor, I think it's almost a fiduciary responsibility to the portfolio company to participate in that network. Whether it be through providing liquidity on a DEX, or providing some assets to be borrowed on a money market. As two examples, right? Like you want to be actively engaged in that network because you're helping to kind of bootstrap. Like crypto VC is the ultimate, I guess it's dog fooding, right? In the traditional VC world, like we're actually using the networks super actively that we're investing in, and we're often the earliest users. And when you see numbers like TVL numbers start to go up and volume numbers start to go up, oftentimes it's the crypto VC or crypto hedge funds that are participating that have invested early as well.
One of the things that I've said to friends who are in traditional venture is that traditional venture is actually really easy because you basically have the outcome decided for you. It's either an M&A event, which isn't under your control, or an IPO, which isn't under your control. But when you're investing in crypto, you have two decisions: whether or not to invest and when to sell. And it's a really difficult question sometimes as to when do you sell. And I think one of the things that has proved to be correct so far is that the ultimate best decision is usually don't sell. But we'll see if that continues.
Yeah, no, I agree with Michael there. I mean, one of the interesting parts from traditional VC, Michael was alluding to this, is you're not really locked in until an IPO or an M&A event. Like you're getting liquid tokens, potentially within a year, part of your position, maybe 10, maybe 20%, depending on the vesting schedule and how long you are. So from a strictly, fiduciary duty portfolio management perspective, you can basically most of the times take your money off the table relatively soon. Now, to Michael's point, generally that's a bad idea, if we've seen with crypto, but it is kind of more of a liquid VC model because you're not exactly locked in for the entire ride, but you can take a couple passengers off the train and still ride it to the end and redeploy that capital into newer projects as well.
It's interesting because like on the traditional VC side, the IPO event is only the next leg in the journey. We actually have a large number of our portfolio companies where we're holding the public equity. And I think on our perspective, thinking about trading liquid tokens is a little bit kind of just like, it's earlier, but trading what is public equity and thinking about when to release that, right? And so I think that really depends on the investor. And I don't know, I would encourage, founders to think about venture investors with a longer term frame of hold. So even for us, we were holding some of our public positions for like 5+ years actually, because we believe, so much, just like in the public equity markets, so much of the value is now generated once you're actually public, you have like 10x returns. And honestly, the same thing with, even more so in DeFi, because we're still in the early stages, I think, of like DeFi development, right? And so if you have investors that would say, once they're liquid, start selling your token, that is a really negative signal, which is why I think as a generalist VC at least, we are not worried. We're not afraid to ask for 4 or 5 year holding periods, because quite frankly, like, we're so early in crypto that in a 4 or 5 year time, we're still kind of like in mid journey, I think, on the adoption of crypto, like to traditional areas of consumer enterprise technology. And so for us, it's just holding is pretty much the de facto kind of stance that we're going to take, even once the vesting periods end.
There's a weird thing in crypto though, which is this concept of fully diluted value, right? Where you have projects that basically 3 months prior raised at like a $30 million valuation, and then they launch the token and they could be worth tens of billions of dollars or billions of dollars. And the question is, like, what is the responsibility of the investor as well as the project? Is it irresponsible for tokens to be trading at that valuation? And is fully diluted value a meme, right? It's a constant conversation in this industry, because oftentimes the projects are releasing supply into the market of existing holders who are gaining that supply. So they're not benefiting from a price increase, but they're benefiting from a volume standpoint in terms of owning a higher percentage of the network. But like, it's we often advise our projects to launch with a higher float into the market to make sure that there's liquidity in the market, somewhere over 10, 15, 20% of your token supply. Get it out there, because if you have 1% of your token supply in the market and an artificially high valuation with like $5 billion when there's maybe like $30,000 of daily trading volume on the asset, it's not good for anyone. It's not good for your early investors. It's not good for you as a team to manage that on the way down. It's not good for retail investors that are coming in and buying this asset at an elevated price. So, I don't know how that has to do with kind of buying and selling of the liquid asset, but it's something that we work really closely with our founders on to make sure that they're managing that appropriately. And it's an element of traditional VC that's just not really there. It's like brand new to this market.
Yeah, I think that's what's so exciting about just being an investor in this space, is that there are so many different ways that you can participate in these communities and actually like feel like you're a part of them, like actually feel like you're a community member. And I think that probably makes the job like a lot more exciting. It probably allows you to hire more interesting people as well. Not everyone's just like a plain investment professional. Like everyone's kind of doing a bunch of different things. And you also get to experiment with these kind of weird crypto native things, like around governance, right? And being like a politician in a way, when there are certain contentious governance decisions. So I think we're kind of approaching our time here, but we really appreciate this panel. I thought it was a great discussion, and just good like highlighting some of the ways that you're really creating value and being the exact opposite of evil. So
thanks for having us.
Thank you, Ryan.
Thank you, Ryan.
Thanks.